Okay, so we keep saying global neutral rates, but some people might still be wondering, like, what are we actually talking about? What are they, and how did this study figure them out?
Great question. What's really smart about this study is how they calculate those rates. They use this bilateral bond market model. They look at all the major G9 economies.
All the big players.
Exactly. And bilateral means they're not just looking at each country's bond market like it's on its own little island. They're really focused on how those markets are connected to each other, like how capital flows between them, especially related to the U.S. bond market.
So like a web, basically, all these markets linked together.
Exactly. And through that lens, they've spotted some big trends globally. There's been this downward trend in these neutral rates across the world for a long time, although we did see things switch up around 2020. They also found that interest rate trends in these countries tend to move together, kind of like they're dancing in sync, and the U.S. neutral rate is like the lead dancer.
The U.S. is setting the pace.
Yeah, pretty much. And get this, they also noticed that the gap, the difference between these interest rate trends across countries, it's actually been shrinking over time.